Welcome back to my YouTube channel, Manu Issue ACCA classes, and this is your Manu Issue, and I'm again back with a new topic, that's the marginal costing statement of profit or loss, and it's from the F2, right? Okay, so again in my previous video I had explained about difference between marginal costing and absorption costing and how we calculate profit in case of absorption costing. So in case you have been missed out my previous video, you can still access it from the playlist available on my YouTube channel. It's free of cost. And the main purpose of explaining this topic is, as I said in my previous video as well, that one of my viewer has asked a question, and before going to other question, it's very important to clear the concept, right? So that's why I'm explaining the concept. All right. Okay, so this is the format I had made. It is similar to the absorption costing. If you look back the format of absorption costing, it's similar. Why I had made? Because it will be easy for you guys to remember in long run. So as I said in my previous video, in absorption costing, while preparation of a statement of profit or loss, the cost is divided into the production and non-production, right? And I have drop out the note here as well. So, but in case of marginal costing, here the costs are divided based on the fixed cost and the variable cost, right? So again, we will take the sales, and this is similar to the as we have taken in the absorption costing. We will deduct the cost of sales, right? And it is also similar, but the calculation is quite different. We will take the opening inventory, but we will only take variable production overhead. That's how we will calculate production unit into the variable cost per unit. But if you will look at the absorption costing format, one more line I have been added, that's of the fixed production overhead absorbed. And how we will calculate this absorb one, I have just kept the formula, and to calculate OAR, I had explained in the one of my video. Just go and check it out in the latest playlist of the F2. Right. So this is the difference that you need to remember between these two. And regarding closing inventory, it's the same. But here, in case of marginal costing, we will only take the variable cost per unit. But in case of absorption costing, we will take fixed cost as well as variable cost. I will be doing the question in the coming video, so you will be more clear. Right. So now, after deducting all these expenses, we will arrive at the gross contribution. So basically, contribution means the sales less variable cost, right? And once you deduct the fixed cost from this contribution, you will have a net profit or loss, right? So we need to deduct the other variable cost as well, like indirect one, which is not related to the production. And again, we will deduct the fixed cost which is actually incurred, and it will include both direct as well as indirect, right? Then we will get our final figure, net profit or loss. So I hope this format is quite easy and for you guys to remember, and do let me know if you find any difficulties or if you didn't get any point, or do let me know in the text box or any of my social media ID. I have just kept the link of the same in the description box. So guys, in coming up video, we will be solving the one question based on this, which has been asked by one of my viewers. So stay tuned with my channel for more video like this. So have a good day. Bye.